Welcome to the Commercial Property Podcast. My name is Suzi Carter. I am a chartered surveyor. I've been involved in commercial property in the UK for 30 years and I've done hundreds of commercial property deals. I'm here to be your guide through the commercial property market, whether you're an experienced investor or whether you're literally thinking about dipping your toe in the world of commercial real estate. I will be here talking to you about all kinds of things commercial real estate in the UK, and I've also got some fantastic guest experts who are joining me. So please do subscribe if you'd like to follow, and if you'd like any more help or information on commercial real estate, please do click www.suzicarter.com, which is my website, and you can find out all the ways I can help you. So stay tuned for this week's episode. Welcome back to the Commercial Property Podcast, and today I'm going to be talking about some legislative changes you may not be aware of that are being consulted on right now in the commercial property world. And these are important not just because I like to talk about law, that couldn't be further from the truth. It's important because if you know about these things, you can stay ahead of the curve and you can understand the implications on you and your investing. And ultimately, that will put you ahead of the game in your investing. And I keep my ear to the ground on things that are happening in the commercial property world so that I can update you through these podcasts and you can keep ahead of the curve and, adjust your strategy accordingly. And all of this is nothing to be scared of. Change is inevitable and modernisation is inevitable as well, because a lot of the lease structures that we talk about in the commercial property world and which govern the structures that we implement, all the structures we have on letting to tenants, they go back as far as 1927, 1954, and things are bound to change. Like life has changed since then, business has changed. And so that's why, it's not to be scared of. It's probably quite right and proper that the majority of what I'm about to talk about is actually being looked at. There are a couple of things, however, where my view differs in terms of the way that the government has gone about looking at a couple of aspects. And, I'm going to talk a little bit about the red flags on one aspect in particular, because it could have implications that perhaps haven't been thought about. So hold that thought and I'll come back onto that one later. So first of all, there is a review by the Law Commission. These happen pretty regularly. I think we're on the 14th or 15th that has happened recently. And something in particular that they are looking at is leasehold reform. So there's a couple of aspects. There's lots of residential aspects being looked at, by the way, and I'm not going to cover that in today's podcast. But there are commercial property aspects, which obviously are really important and really relevant. So the first one is with regard to intra-group transfers. So if a tenant is in place and they decide that they don't want to trade from the property anymore, then what currently happens is that they either sublet or assign their lease. So if they sublet, then the tenant will stay in place and there will be a subtenant or subtenants in place who will pay that tenant, and that tenant will then pay the landlord. So basically nothing changes as far as the landlord's concerned, but there's subtenants who kind of effectively paying the tenant's rent. If the tenant decides to assign their lease, what that means is that they hand that lease off lock, stock and barrel to a third party. You very often can't do assignments of parts, so it has to be the whole lease that is handed over. And then what will very often be put in place is something called an authorised guarantee agreement, or an AGA, and that basically keeps the current tenant on the hook. So if the new tenant fails to pay their rent or goes under, then the landlord would call on the previous tenant or the existing tenant to basically step back in, and that's called an authorised guarantee agreement. The Law Commission is particularly looking at authorised guarantee agreements where there's intra-company group transfers, because in a lot of cases, these AGA provisions, these authorised guarantee agreement provisions, have to kick in, and it's very clumsy. and probably doesn't need to be that clumsy. So they're looking at all of that. So the implications for to look out for, because obviously a lot of this legislation is only in consultation and is only being kind of reviewed at the moment, and we're expecting all of it to come into place in the back end of 2026. So the things to look out for, and obviously I'll update you on this when it does come out, but the things to look out for in this is whether it makes it easier or harder for a tenant to assign their lease. As a landlord, we don't want it to be difficult for a tenant to do that, because it's going to put tenants off taking longer term leases. And as long as we have checks and balances in place, then so that the covenant that we're letting to isn't diluted, then we are relatively neutral on it. But obviously the big if on that is, is the Law Commission going to neutralise or reduce the guarantee that you might have from a previous tenant? And that's really important. So that's just something else to look out for. Not massive implications, I wouldn't have thought, unless they kind of curveball this one. But I'll update you as and when this one comes out. The second one I want to talk about today is the Landlord and Tenant Act 1987. So those of you who are familiar with residential property will be familiar with this one. So if you have tenants in place and you want to sell your freehold as a residential landlord, then you have to offer that property, give a right of first refusal to the existing tenants. That's a relatively well-worn path. Now, where this gets complicated is on mixed-use properties, because on mixed-use properties, you have to also offer the commercial to them. And, that just doesn't really particularly make sense. So it doesn't really work very well. It can cause unnecessary delays as well. I've personally had a few situations like this, and, it's really held up sales or purchases. So that's something else that the Law Commission is looking at. So watch this space on that one. The kind of the part two of the Commission report or investigation is probably much more far-reaching for implications for commercial landlords. So this one, these are in particular to look at the maintenance and repair liabilities in leases, with reference to environmental, social, ESG type provisions, because since the Landlord and Tenant Act 1954 was put in place, obviously there's a lot more emphasis now on EPCs, on making sure that there's decarbonisation, carbon neutral, and a lot more on sustainability, as well as social equality, etc. And really, current leases, rigid lease structures, they're very difficult to cater for this. And I'll give you a scenario on this. So if legislation changes on EPCs, then it's very difficult for a landlord, and the liability at the moment falls on landlords to do this work. If there's a tenant in place occupying on a relatively long-term lease in a commercial property, there's usually provisions there that say that they want quiet enjoyment. Quiet enjoyment means is that basically the landlord's not going to barge in every 5 minutes and disturb their trading, because they're a business. They don't want a landlord involved in it. Now, there are very few leases that have provisions for a landlord to go in and do any EPC changes. And actually, they don't actually need to do it while the current tenant is in place, because you usually, at the moment, only need to do EPCs changes or have a new EPC certificate in place when a tenant leaves, so when you're doing a new letting or a lease renewal. And legislation is changing all the time. So if there's legislation that a landlord has to implement, and the obligation is on them to implement it, there's going to be a very limited liability unless a landlord's written this into a lease. There's very limited liability for a landlord to go into the property, and there's usually no implication or liability for a tenant to do the works. So we have a situation where the government wants, all property be improved, but lease structures are making it such that it's very difficult for that to be the case. And there's definitely a question mark in commercial property as to who should pay for this stuff. I mean, there is a question that if a tenant's in a property on a longer term lease, then why shouldn't they be paying for some of these EPC changes or sustainability upgrades, etc.? Because, ultimately the landlord's kind of not involved for the foreseeable future in that property, other than obviously the ownership. So what the Law Commission is doing is they're reviewing dilapidations, they're reviewing service charges, because very often you have service charge disputes. So a landlord, there might be some common parts, and a landlord wants to do some of these sustainability upgrades in the common parts, and the tenants are kind of arguing against it, saying that they don't want to pay for it. So you get a service charge dispute, which means that you kind of nothing gets done. Also, EPCs are being upgraded, and so there's a big review as to who's responsible for doing some of these changes, for sustainability changes, and whether lease structures need to change to support that. And, I don't think that's anything to be worried about from a landlord's perspective, or indeed perhaps from a tenant's perspective. At the end of the day, if everybody's working to a common goal, then it's not in anybody's interest for this work not to happen. Now, obviously, where a landlord's going to get concerned, or whereas landlords were going to get concerned, is if there becomes a huge amount of liability on us as landlords to go in through halfway through lease terms and have to do loads of work at our own expense. It seems fair that some of that work, especially on longer term leases, should be shared with the tenant. So watch this space on that. But obviously anything where there's a big liability could be a problem, especially in terms of marketability of that property, and especially if you're buying something that perhaps is quite old, hasn't had any improvements done to it, and so that potentially could be a big financial liability. So it's just something to think about and keep an eye on if you are buying that type of property. So it's in consultation at the moment. None of this is being implemented without consultation. The Law Commission is consulting on it, and hold that thought, because that's really important for the next point I'm about to make. So this kind of thing has to be done through consultation. I very strongly believe that, and there's lots of interested parties that are involved in that. So watch this space. And in terms of EPCs, there are proposed changes towards the end of 26 that might be coming in. So again, this is a big might, because we don't know what's going to happen, but there's talk of shorter validity periods. So the moment EPCs run for 10 years, so will they run for 2 to 5 years perhaps? There might be more, rather than they're quite a blunt instrument at the moment. Will there be multiple performance metrics now that an EPC has to perform against? So there might be more complex things.
This episode is brought to you by Bond Finance Limited, your trusted partner for commercial property mortgage solutions. Are you an experienced residential property investor about to diversify into commercial property, looking for funding options? Bond Finance can help. Whether you're planning to expand, refinance, or make a major property investment, Bond Finance provides expert advice with access to a wide range of lenders, from high street to specialist. Book a free discovery session today to explore how we can tailor commercial funding solutions to your unique investment strategy. Visit www.bondfinanceltd.co.uk and take the next step in your commercial finance journey.
There is a lot of talk, and I suspect this will happen, that the landlord has to maintain the EPC not just on lease renewal or a new letting, but all the way through the lease. And of course, that has a big knock-on implications on cost, but also in terms of ability to do that. There's also a lot of talk about including listed buildings in EPCs, and also things like higher penalties, more kind of clamp down on bad EPCs, potentially less exemptions, because at the moment there's a lot of exemptions, so potentially less exemptions. So there is the potential for quite wide-ranging implications for this EPC legislation. So that is definitely something to keep an eye on and just work through. It's a relatively level playing field, however, because every property will be subject to this. So, it just is going to be a difference between new and old types of buildings where there's a lot of work that's needed, or building that where perhaps there's less. So that will be the difference in cost on some of this stuff. So maintenance, repairs, service charges, dilapidations, EPCs, kind of all up for grabs at the moment. So watch this space on this, but it's unlikely to come in until the back end of 2026. So I will keep you updated on that. The next thing I'm going to talk about has been put in some legislation without any consultation, and I think is potentially the most far-reaching, and if it goes through, most detrimental legislation that we're looking at with regard to commercial. And that is that without consulting with any property forums, tenants or landlords, the government have put in some legislation that's had its first reading in Parliament, that they are going to abolish upward-only rent reviews in commercial property. Now, upward-only rent reviews have always been in commercial leases. If the tenant's in a particularly strong position, they might be able to negotiate an upward or downward rent review. But upward-only rent reviews forms part of the structure of commercial leases in the UK, and that's important because the UK has a competitive advantage over other European and indeed kind of global leasing structures because of these upward-only rent reviews, because we tend to have longer leases and we tend to have upward-only rent reviews. And, it just means that you're keeping in touch with inflation. And in recent years, we've had RPI and CPI linked rent reviews that have been put in place. In a lot of leases with caps and collars. We've got upward-only rent reviews, and obviously with upward-only rent reviews, if the rent doesn't go up, then there are nil increases. So it's not like it's always going to go up. If there's no evidence for the rent to go up, then it won't go up. But the government seems to be going about this, and this is just my opinion, but my opinion is that the government is going about this in quite a clumsy way. So first of all, not consulting. I think non-consultation is a big problem because, again, one of the reasons why overseas investors in particular, and institutions and pension funds, etc., invest in the UK is because we have a legislative and parliamentary structure, which means that legislation isn't just lobbed in to bills without consultation. And that gives investors confidence that this doesn't happen. Now, obviously, if this is happening in this particular bill and it goes through Parliament and it all gets implemented, what does that mean for the future in terms of other legislation that the government may decide to implement, property or anything else effectively? It basically undermines the fundamental parliamentary structure and the fundamentals of kind of why investors really, really like to invest in the UK. Because, if you compare some countries in the world and the uncertainty you have and the fact that they can devalue the currency overnight and introduce legislation that's very detrimental overnight, that doesn't tend to happen in the UK. So this could be potentially a really dangerous precedent. So that's the first thing. I think number two is that there is a lot of nervousness in an industry, in a sector that has already been in the doldrums. And obviously, if you listen to this podcast, you'll know that that's not necessarily bad news for investors, because there's a window of opportunity at the moment to buy properties at great prices. But equally, at some point, we want this sector to recover, and that's not in the interest of anybody else and anybody at all if the sector doesn't recover at some point. And so therefore, if the whole structure of the fact that you may not get upward only rent reviews, and in fact that there's anti-avoidance legislation in place, then and even if a tenant can trigger rent reviews, that completely fundamentally changes the structure of UK commercial leasing. And so potentially our standing in the world, and I'm kind of not over exaggerating this point, our standing in the world, the fact that lots of overseas investors invest in the UK, potentially there is a big problem here, that the attractiveness of the UK, which is becoming less attractive because of other things, could be significantly affected by abolishing upward only rent reviews. And actually the very tenants that, or the very sectors that the tenants are purporting to wanting to protect, like retail, hospitality, leisure, they're saying that upward only rent reviews is really affecting the ability for them to trade. I mean, frankly, that's not correct, because a lot of these tenants negotiate short, flexible leases anyway. And very often you don't even see a rent review in a retail lease these days, unless you've got a kind of brand who are big boys and girls and can take care of themselves, because they take short, flexible leases. So the cynical side of me says that the government's introducing this so they can introduce higher business rates, or they don't need to abolish business rates, which at the end of the day was in the Labour Party manifesto, that they were going to put a new structure in place for business rates, which they haven't done. And I'll go on to business rates in a minute. So that's a cynic in me coming out. But watch this space on this one. I will update you as and when anything is announced. So we've had the first reading of Parliament on this. The second reading is due in this quarter. But there's already been some MPs raising flags on this and raising concerns. So there is a high likelihood that some of this legislation will be changed. But we've seen this happen, for example, in Australia with all the anti-avoidance legislation. And it's not great from a landlord's perspective. And initially, at least, we will see a two-tier market of leases with upward-only rent reviews and those without. But fundamentally, and I'll talk about this on another podcast episode, fundamentally, if you're buying the right property in the right location, which really is the fundamental of commercial property investing, if you're niching properly, then you should be buying in locations where there is the potential for rental growth. So what it will do is if you're investing properly, is it may not have as much of an impact as you may think. Valuers will adjust to it as well, especially if there's a level playing field where everybody's got this type of lease. But in the short term, we will see some implications. So that's something to look at and to think about. And I will update you kind of when anything gets announced on this one. The next one to talk about is business rates. So we have a new rates revaluation on the 1st of April this year. And there's been a lot of chat in the budgets and outside the budgets about business rates. And so what we're looking out for here is, what will the new rates revaluations look like? And what the government has basically announced is that, well, what always happens is that where there's lots of rental evidence and rental growth, there'll be higher rental values, there'll be higher business rates versus those where there isn't much evidence. But the government has announced that for retail, leisure, hospitality, there will be lower multipliers. So if you recall how the business rate system works at the moment, there is a rates valuation and then you have a multiplier applied to that, which is basically the pence in the pound at which you pay business rates. There will be a lower multiplier for retail, leisure, hospitality than everything else. And there'll be larger increases for transitional relief. Transitional relief is when you have a revaluation rather than just having to pay the new rates overnight. You will basically have a transition where you pay it over a number of years. So there'll be larger increases. So the implication of that is, whilst retail, leisure, hospitality will have lower liabilities potentially, then of course that's got to be made up elsewhere. And so we're expecting to see industrial in particular going up. Industrial rates will definitely go up. So I still think that's a great sector to invest in, but just be aware that business rates may go up in that sector, which will potentially affect affordability. I suppose last but not least is something to look out for this year is there was a consultation in 2025 about leases outside the Landlord and Tenant Act 1954. So there's basically two types of tenancy in the UK. There is leases inside the Act, which basically gives tenants security of tenure, which means they have the right to renew at the end of the lease. And leases outside the Act, there has to be agreement between the landlord and tenant for that to take place, which means they don't have the right to renew at the end of their tenancy. And at the moment, if any lease is 6 months or over, they have the right to be inside the Act. But there is some consultation about whether that goes up to 2 years. So only 2 years leases and above have security of tenure. So there's potential that there's a lot of shorter term leases that may not have security of tenure. So that's just something to look out for. So all of this is really important stuff, but it's not anything to be afraid of or worried about. It's just something that if you know about this stuff earlier, and the reason I've kind of brought this into a very early episode of the podcast in 2025 is that if you're aware of this legislation, this consultation, then nothing is going to be a surprise. You can start to just to think about it with your strategies, but the fundamentals stay the same. Niche your strategies, niche your investing strategies, make sure you get all the relevant surveys and do all the right due diligence on properties. Like I said earlier, especially with EPC changes, there's likelihood that older properties, more dilapidated properties are going to have higher liabilities. So just be aware of that and make price adjustments if you have to reflect this point. It's better to make price adjustments now than to be hit with a massive bill later. So just bear this stuff in mind when you're negotiating a price. Make sure that when you're letting to tenants, you check their covenant really carefully. You do your checks and balances on them and get guarantees, guarantors in place as needed. Make sure that you understand the sector the tenant's operating within, and just make sure that you think that they're future-proofed in terms of where the economy is. And obviously put the lease structures in place that suit you to make sure that you are protected as the landlord. And those fundamentals don't change. If you invest in the right place, in the right location, with the right tenant, with the right lease structure, you're always going to get a decent valuation, no matter what happens in the legislation. So none of this should scare anybody off investing in commercial, far from it. In times of change, there's always an ability to get a competitive advantage for sure. So that's why pre-warned is pre-armed. So hopefully that information has been useful for you. I will keep you updated as I get updated, and I look forward to seeing you next time on the Commercial Property Podcast.